In this video, I want to give you a quick look at 3 globally diversified dividend ETFs that I think are genuinely strong picks. One of them is still quite new, and you might be surprised that it already made it into my personal top 3. But as always, keep this in mind. This is not financial advice, just my own opinions and experiences. We'll go by fund size and start with the biggest ETF, which is the Vanguard Dividend ETF. It has been one of the most popular dividend ETFs in Europe for many years, and now holds more than 7 billion euros in assets. You can see that the fund size has been growing steadily, and demand remains very strong. This ETF invests in almost every large and mid-sized company that pays an above-average dividend. REITs are not included. In total, the fund holds more than 2,000 companies, which gives you extremely broad global diversification. I also like the geographic allocation, as it doesn't rely too heavily on the US, and even includes exposure to emerging markets. However, the top 10 is still dominated by well-known U.S. giants. The total return since the fund's launch is almost 9%, which is very solid for a dividend strategy. It is also great to see that this ETF delivers consistent price appreciation over time. Here, you can see the pure price performance of the ETF. Now, let's talk about the dividends. Payouts are made quarterly, and the average dividend yield since launch sits at around 3.4%. That might not blow you away, but the yearly payouts are remarkably stable, as you can see here. In my opinion, the biggest weakness of this ETF is the very low dividend growth. Since launch, the fund has achieved an average annual growth rate of less than 3%. The relatively low yield and the slow dividend growth mainly come from the way the ETF selects its companies. It simply includes every company with a high dividend, without checking for quality. So, why do I still consider this one of the best global dividend ETFs available? Because it is the broadest, simplest, and most worry-free dividend ETF you can possibly own. You can hold it forever without stress. During market corrections, you can add more shares without hesitation, which effectively boosts your personal yield on cost. I personally hold a small position in this ETF, and I'm currently working on increasing its share to 20% of my portfolio. If you enjoy my content, a like and subscribe means a lot. Thanks. Let's move on to the second ETF that I consider a solid choice. This one is the VanEck Dividend ETF. Given the massive inflow of capital, the fund's size has absolutely exploded in recent times. Since 2025, it has added more than 5 billion euros in assets, which is just incredible. Just a few years ago, almost nobody knew it, and now it's on track to challenge the Vanguard Dividend ETF. But why is that happening? Compared to the Vanguard ETF, this fund uses a completely different approach to selecting companies. Instead of 2,000 holdings, we only have around 100 here. But these 100 companies are carefully selected for quality. They represent the strongest income-generating businesses worldwide, chosen for their dividend yields, their resilience, and their long-term growth potential. A special focus is placed on dividend stability and reliability. The ETF favors companies that have paid dividends consistently and whose earnings can comfortably support future payouts. So, what's inside the portfolio? It is a mix of developed markets with a strong focus on Europe. In the top 10, you'll find large, well-known companies, many of them European. This concentration on 100 high-quality dividend companies has several positive effects. Since launch, the ETF has delivered a phenomenal total return of more than 12%. Over the last 3 to 5 years, It even managed to keep up with the Nasdaq 100, which is almost unreal. A high total return also means strong price performance, and indeed, the chart shows an outstanding upward trend. The ETF's recent success mainly comes from two factors. First, the European stock market has been extremely strong since 2025, which pushed this ETF higher. And second, the fund has a heavy focus on the financial sector, which has performed exceptionally well lately. Here you can see the price performance of an ETF that holds only European banks. This is clearly linked to the interest rate turnaround, which has brought bank profits back to life. The price pattern looks very similar to the VanEck ETF, doesn't it? If we look at the sector allocation of the VanEck ETF, we see that financials make up around 30% of the fund. That is still not a small amount, but not long ago the share was about 40%. Apparently, the ETF was rebalanced recently. The lower allocation to financials is something I personally like, but it could also mean that dividend payments might drop a bit. Speaking of dividends, how does it perform? Since launch, the ETF has paid a relatively high dividend yield of more than 4%, while also delivering solid dividend growth. Just like the Vanguard ETF, payouts are made quarterly. But when it comes to yield and growth, the VanEck ETF clearly looks stronger. So what we have here is an ETF that offers not only strong price performance, but also stable and growing dividends. No surprise that the VanEck ETF has become so popular with dividend investors. As an addition to a solid dividend portfolio, this ETF is, in my opinion, a perfect fit. However, unlike the Vanguard ETF, I wouldn't be comfortable allocating my entire portfolio to it. Why not? There are two main reasons. First, if the European financial sector runs into trouble, this ETF could drop sharply. And second, the Vanguard ETF holds more than 2,000 globally diversified companies, including emerging markets, which makes it much easier to sleep well during a crisis and confidently buy more shares. All right, let's move on to the final ETF that I consider one of the best global dividend options available today. And no, it's not the iShares Global Select Dividend ETF, and it's not the SPDR Global Dividend Aristocrats ETF. It's something completely different. For this one, you won't find it at the top of the rankings. We have to look a bit further down the list. I'm talking about the L&G Global Quality Dividends ETF. I recently made a full video about it, but let me give you a quick summary here. Because the ETF is brand new, the data on sites like Just ETF is still incomplete and not very helpful. Extra ETF is a bit more up to date, so let's continue here. The fund was launched just this year, and while the fund size is still small, it is growing very quickly. The 15 million in assets we see here is already outdated. On the L&G website, we can see the fund has already collected more than 60 million US dollars. So, what makes this ETF so special? There are several key reasons. First, the ETF pays dividends monthly. That is extremely rare for a standard non-covered call ETF, and it's a massive plus for passive income fans. Second, much like the VanEck ETF, it selects its companies based on strict quality factors. The quality filter ensures that only strong, financially healthy dividend companies make it into the portfolio. And very importantly, the ETF also requires a track record of dividend growth. Only companies with positive dividend growth over the last 10 years are included. Because the ETF is so new, we don't have a long, real-world dividend history yet. However, based on the underlying index, the expected dividend yield is around 3.7%. And the third reason this ETF stands out is its structure. It holds more than 900 companies from developed markets. All companies are equally weighted, which is a rare feature, especially in the dividend ETF space. Because of this, the top 10 holdings make up only about 3% of the entire fund. The country allocation also looks excellent to me, with very balanced exposure. All of this results in massive diversification, potentially even higher than the Vanguard ETF, which holds more companies but doesn't use equal weighting. To sum it up, this ETF has massive potential to become one of the most popular dividend ETFs in the near future. Here are a few more globally diversified dividend ETFs that didn't make my top 3 but still deserve an honorable mention. The iShares Stocks Global Select Dividend 100. It offers a very solid dividend yield of 4 to 5%. However, the price performance is relatively weak, dividend growth is minimal, and the payouts fluctuate quite a bit. The SPDR S&P Global Dividend Aristocrats. It provides a dividend yield of about 4% with stable and consistent payouts. But similar to the iShares ETF, there is barely any dividend growth, and the price performance is quite weak. The iShares World Equity High Income Active. You probably didn't see this one coming. It offers an extremely high dividend yield of around 9%. In terms of total return, it has recently managed to keep up reasonably well with the MSCI World. However, it's a complex product that uses covered calls, futures, and active management. The ETF is still very new, and it's completely unclear how it will develop over time. In my opinion, products like this should be approached with caution. Still, I've invested a small amount in this ETF, and I'm watching closely how it performs. All right, that's it for today. Which of these ETFs do you hold in your portfolio? Write it down in the comments. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time.